growth isn't the same as profits because these companies didn't necessarily make money. The stocks actually had value. So it wasn't as if you had to stick with the rules of like earnings is the reason the stock has value, because the carriers themselves had spectrum.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal and Tom Lee explore Bitcoin's network value, unveiling insights on market dynamics and digital innovation. Join us to watch their breakdown and learn more about these compelling topics.
Was it the realization that you had that these things had network effects, that these were kind of Metcalfe's law-based networks? And why was that different to the landline business, which didn't seem to have, or was it still valued in the same way on network effects, or was it more just straightforward cash flows?
Well, the landline business was very mature in the 90s. So penetration was already 100%. And so I think that landline in the burgeoning era, so that would have been the turn of the 1900s, when they were originally laying the cables, was very much a network effects business, because that landline business was hyper competitive. Because what people were doing in the 1900s was they were laying copper fiber to homes, and they were getting contracts with cities to actually put lines in the cities, on these poles. But believe it or not, they weren't monopoly locations. So there were tons and tons of what they call regional operating companies. And so, many, like even by the 90s, there were still maybe 12 regional telephone companies on top of the bells that were spun out of AT&T, which became a monopoly provider in that early 1900s period. So telephony itself was actually the Wild West in the beginning. And there was this pricing regime called intra-lata calling. So phone calls, so you probably, if you weren't growing up in the States, you won't know this, but like even in the 90s and 80s, if you were calling your friend who lived one lata over, he might only be like literally a 5-minute drive, but he was in what they call a lata area, it was charged as a long distance call. So local phone calls were literally based on a lata, what they call intra-lata calling, and inter-lata was whenever you crossed the lata, which could just be like 10 miles away, or it could be 30 miles away. You don't have any idea. And of course, cellular compressed all that, because cellular suddenly said, like, why should we even charge the difference between local and long distance?
So we're now in the early 2000s. You've seen the explosion of mobiles. You've now seen mobile flip over. What's next for you? That was a very
successful period for us covering the wireless industry, because it really blossomed from the 90s all the way to the mid-2000s. But by 2007...
Bitcoin speculators have suffered a staggering $100 million in losses over the past 6 weeks due to panic selling, according to new research from CryptoQuant. The volatility of Bitcoin's price continues to test investor resolve, particularly among short-term holders, STAs, who have been unable to withstand the pressure of recent market fluctuations. These investors, who acquired BTC between 1 and 3 months ago, found themselves caught in a sharp price drawdown, forcing many to sell at a loss rather than endure the uncertainty. CryptoQuant's analysis highlights a significant reduction in the realized capitalization of this cohort, meaning the value of BTC they'd purchased has fallen well below what they initially paid. The net unrealized profit/loss (NUPL) score for these investors currently stands at -0.19, indicating that more coins are being held underwater than at any time in the past year. This selling pressure has contributed to Bitcoin's struggle to regain momentum, with fears of a prolonged bearish phase looming.
Equity markets often have their own view about a company's prospects that are separate from the bonds. And so when the bonds recovered and the stocks hadn't, that was always a really big tactical opportunity for us. And so I had made some very famous bottom calls for the wireless stocks because I had seen pronounced recoveries in the bond prices that weren't reflected in the stock prices. But I think the second, maybe more important thing I learned was the bias of age, that I was in my 20s covering wireless. And actually, I became a senior analyst at age 24. So by age 24, I was actually covering my own stocks. And I had a lot of optimism about wireless because I saw how much my friends were using it to communicate. In the 90s, we all had to use payphones and answer machines, but when you had a cell phone, you could suddenly call each other. And so it seemed very revolutionary to me. Whereas a lot of our clients who were in their 40s and 50s thought of wireless as a yuppie toy. And so they viewed wireless as simply something that the landline companies, business wireline or long distance, would use to protect their existing businesses. So they didn't see wireless as actually a replacement or supplanting landline. They saw it as a way to protect landline. And that also gave us a lot of opportunity because, of course, the world flipped. It must have been 2000 or so. The number of cell phones exceeded the number of landlines. So it took, 8 years, but then the crossover happened. And so that made me realize the world of new opportunity and technology cannot be viewed through the eyes of old people, because older Americans tend to favor incumbency. And, of course, that's actually very true to crypto, because I saw a lot of the echoes of crypto in the 2017 period that looked a lot like wireless. The idea of adoption of crypto.
Bitcoin's price has been stuck in a tight trading range, failing to break past key resistance levels amid growing economic uncertainty and waning investor confidence. Since March 9, BTC has oscillated between $78,599 and $84,000, with the latter proving to be a formidable ceiling preventing further upside momentum. Analysts suggest that a combination of macroeconomic factors, including geopolitical tensions and trade war fears, has dampened enthusiasm for risk assets like Bitcoin, causing demand to weaken. The political landscape, particularly former U.S. President Donald Trump's proposed trade tariffs on Mexico and Canada, has fueled uncertainty in global markets. Investors worry of potential inflationary pressures and economic slowdowns have become more cautious, reducing their exposure to volatile assets such as Bitcoin. On-chain data from Glassnode supports this sentiment, showing that short-term holders are exiting their positions at a faster rate than longer-term investors, a sign of fading speculative demand. Bitcoin's technical indicators further reinforce the case for continued consolidation. The cryptocurrency has failed to reclaim the 200-day simple moving average SMA, which currently sits around $83,700. This key level, along with the 200-day exponential moving average EMA at $86,000, has become a significant barrier that Bitcoin must overcome to reignite bullish momentum. With futures funding rates hovering near neutral, traders remain indecisive, awaiting a major catalyst to determine Bitcoin's next move. Until economic conditions shift or institutional demand strengthens, Bitcoin's price may remain trapped within its current range, with risks of a further pullback towards $70,000. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.